Hey folks, Greg Silverman here. Welcome back. Another session of Come Learn with me. Do you know about my webinar channel called Looking Over the Manager's Shoulder? We'll post a link down below on that. And so what we do, if you wanted to get under the hood, learn a bit more the way we do research is, we feature these articles, we learn, we study on thematics, we study deeply on different niche thematics, and then we find the best way we can execute our plan, our investment plan through managers, direct investments, stocks, ETFs, you name it. We look at anything and everything. And so anyway, that's what's worked for us in the past. And anyway, another session of Come Learn with Me, an article that you all liked. Doesn't surprise me again. This is percolating. The price of the stuff that makes everything is surging. Probably talking about commodities. Let's have a read and see what it says. Global economic rebound is fueling a blistering commodities rally. It's a little bit old, not too bad, about a month old. The price of raw materials used to make almost everything are skyrocketing, and the upward trajectory looks set to continue as the world economy roars back to life. From steel and copper to corn and lumber, commodities started 2021 with a bang, surging to levels not seen for years. The rally threatens to raise the cost of goods from the lunchtime sandwich to gleaming skyscrapers. It's also lit the fuse on the massive reflation trade that's gripped markets this year and pushed up inflation expectations. With the US economy pumped up on fiscal stimulus and Europe's economy starting to reopen as its vaccination rollout gets into gear, there's no reason to expect a change in direction. The market pushed up inflation expectations. Commodities from food to metals are soaring. Corn, oil, copper, lumber, although I believe we'll come back. I think lumber prices have come off recently. Aluminum. JP Morgan Chase & Co. said this week it sees continued rally in commodities and that the reflation and reopening trade will continue. On top of that, the Federal Reserve and other central banks seem calm about inflation, meaning economies could be left to run hot, which will rev up demand even more. The most important drivers supporting commodity prices are the global economic recovery and acceleration in the reopening phase. What about the blizzard of money that's been created? To Giovanni Starnovo, commodity analyst at UBS Group AG. The bank expects commodities as a whole to rise about 10% in the next year. China, a crucial source of supply and demand for raw materials, is playing a big role, particularly as the government tries to reduce production of key metals like steel and aluminum. It's also buying up massive amounts of grains. Food prices are also being affected as poor weather in key growing nations like Brazil and France hits harvests. China's reducing supply. It's about every basic material gets rapidly more expensive. Here are some ways the rally is gripping across the globe to create winners and losers, going green. Copper has enjoyed an unstoppable rally for more than a year thanks to pledges by governments to boost renewable energy and electric vehicle use. That will make all the various forms of green technology that rely on it a bit more expensive. Understatement. Bigger power grids is one such case. About 1.9 million tons of copper were used to build electricity networks in 2020, according to Bloomberg NEF. And the price of the red metal is up more than 90% in the past year. Usage will almost double by 2050, BNEF forecast, while demand from other low-carbon technologies like electric vehicles and solar panels will also be moving. So that's a decent enough. For countries, the impact of the commodity rally depends on whether they're an exporter or importer. For those relying heavily on exporting raw materials, the huge upswings can only be good news for public finances, especially when they've just been stricken by a once-in-a-century pandemic. The likes of Australia, iron ore, Chile, copper, and Indonesia, palm oil, all make huge sums from commodities. Meanwhile, countries looking to rebuild infrastructure may find their budget by less than they used to. President Joe Biden's $2.3 trillion plan is one such case. Electricity grids, railways, and refurbishing buildings are among the items on the shopping list that will use large amounts of metal. Consultancy CRU Group estimates the program will add 5 million tons of steel to the 80 million the US uses each year, with similar boost to aluminium and copper demand. Meat. It's been a tough year to be in the meat business, from devastating COVID outbreaks to the deadly pig disease that hit Germany and is roaring back in China. And as crop prices surge, farmers rearing poultry, pigs, and cattle are among the first to get squeezed by the eye-watering run-up in grains. Costs for corn fed to livestock have doubled in the past year, and soybean meal is more than 40% higher. Wow. While there's a delay before that hits the burger chain or steakhouse, the already size of prices creeping higher. Pig disease. At that point. Old steel mills. Steel producers in Europe and America have suffered from years from low prices caused by global overcapacity. Plants struggled to make money and job security became a growing worry. Over 85,000 steel jobs were lost in the European Union between 2008 and 2019, according to industry association Eurofer. That's all changed dramatically thanks to booming steel prices. Futures in China, by far the biggest producer, have smashed records, even outpacing gains in key ingredient iron ore, as the government took measures to curb output. That supercharged rallies of benchmark prices in Europe and America. The mills were already running at maximum capacity as they're trying to meet unexpectedly high demand. Steel prices. Wow. And lastly, breakfast tables. Whether you prefer latte or espresso, sweetened or plain, the key ingredients of a cup of coffee have surged. Arabica coffee futures have risen about 33% in the past year, while raw sugar has also advanced. Fancy a slice of toast, benchmark wheat prices have hit highest since 2013. Of course, rising commodities don't immediately show up on grocery shelves and cafe menus. They make up just a part of the costs for retailers, which often absorb the initial increase to keep customers coming back. But there's a limit to that margin hit, and high prices could ultimately feed through to consumers. Okay, interesting. I want to show you guys a few charts, so hang around. Okay, I just wanted to have a quick look at lumber prices. Really interesting. This is a 5-year chart of lumber prices. They started taking off hit a bottom around April 2020. Let's say $300, give or take. They surged below to $274.50. Made a high of 1,733.50. So what's that? Wow. Normally it's nearly 8 times higher. No. 4 times higher. No, 6 times higher. 6 times 276. Yeah, that's 6 times higher. 600% gain. 500% gain. Okay, really come off its highs. Let's zoom into this area now because look, it came off like that before. It's definitely done that again. So let's have a look. Let's do a quick zoom into that. So there we go. That's the sell-off. Yeah. 1,733 to 1,059, 700 points. Wow, that's a lot. So that's about a 30 or 40% drawdown, right? It could be in the normal corrective mode of things. Yeah. Who knows where it's going, but that was worth a look. And then here's something else. All right, guys, the other thing I want to show you is a non-event. So let's call it there. I hope you enjoy this. Another issue of Come Learn With Me. If you have any suggestions, do let me know. Take care. Bye.